Welcome back, everybody. I hope you've had an amazing time during the breakout session and had the opportunity to actually talk to each other and process what you've learned so far. And now it is time for our second panel of the day. And I'm actually not going to be the one to introduce this panel. We have a special introduction of the panel from a special guest. So please give a warm welcome to Sara Wimmerkrans.
Hallå Helsingborg! Hur var lunchen? Får jag ett jubel för den goda maten, eller? Ja, grymt. Nu ska ni få träffa en riktigt intressant panel på ett riktigt intressant ämne som heter What is Sustainable Investing? Vi står nu inför ett stort antal problem som kommer behöva lösas med hjälp av teknik och riktigt smarta investeringar. Vi ser att den medvetna konsumentgruppen växer väldigt kraftigt. Regulatoriskt händer extremt mycket inom hållbarhet. Och vi tror att om man inte har koll på de här grejerna, om man inte förstår sitt avtryck i hela produktionskedjan på ett stort antal variabler, såsom utsläpp av CO2 eller kemiska ämnen eller mikroplaster eller för den sakens skull sociala villkor, alltså hur har folk som jobbar hos oss det, så kommer man inte bli vald av kunderna i framtiden. Så att är det en risk att inte kunderna väljer om 10 år så är det ju inte heller en bra investering. Så därför skulle jag säga så att sustainable investing finns inte, för det borde vara all typ av investering, så ser jag på det. Sustainable betyder långsiktig och det tror jag är det stora skiftet just nu från kortsiktiga vinster till långsiktig strategi, för det är det som kommer kunna generera vinster. Slut är tiden då avkastning var synonymt med att inte kunna driva förändring och vice versa. Nu kan du göra avkastning på att driva förändring. Kanske är det enda sättet att göra avkastning. Att också ha en god tanke med i det hela. Hoppas ni får en riktigt bra dag och purpose over politics. Jag vill skicka med en liten fråga till alla publiken och det är: vad ska du ägna dig åt nästa år för att när du kommer tillbaks till konferensen nästa år kunna säga till de som sitter bredvid dig att jag gjorde den här planeten, eller åtminstone min vänskapskrets eller min familj, till en bättre plats att vara på. Ha en riktigt bra dag och tack för att jag fick komma igen.
Thank you, Sarah. Give her a round of applause. And to moderate this panel, we have no one less than Nino Subotic. Nino is an entrepreneur who grew his business from 0 to 100,000 paying customers and an annual recurring revenue of $100 million. He is now the co-lead of one of the Nordic's best startup accelerators, Fast Track Malmö. Please give a warm welcome to Nino.
Hello. Yes. Okay, it's just a small correction there.
1 million.
Yeah, it's just like a small detail, 100 million, 1 million euro. The focus on me that I'm great. Thank you, and appreciate that you want to have me as your moderator today. I'm Nino, and as Aisha said, I work at Mink and Fast Track Malmö Accelerator. We're here to talk about sustainable investing and ESG investments. And together, with me, I have 3 amazing people that I want to introduce a little bit. First up is Heidi. Welcome, Heidi. From Pale Blue Dot, and you can you will do the intro pretty soon. And then we have Magnus. Woo! And Karsten from everybody knows Karsten, so he's here. Okay, let's start out with you just giving a 30-second quick intro on who you are and what you do.
Sure. Hi, everyone. My name is Heidi Lindvall. I run a fund called Pale Blue Dot. It's a climate tech VC fund. We're based in Malmö, but we invest all around Europe and US. We're a seed stage fund, so our sweet spot is investing in early stage companies that do something positive for the planet, essentially. And yeah, we've been up and running for 1.5 years now. We have 15 investments all around Europe and US. And my own background was in entrepreneurship and building accelerators and microphones and things before starting this.
Thank you.
Excellent. My name is Magnus Alfredsson. I am the founder of Proethos. I have a background in finance, worked for 15 years, got fed up with it, selling things that I never would buy myself. So 6 years ago, I decided to put together a fund, or start a fund that was really good, really cheap, really sustainable, and that would fit most people. And that's why I'm here.
Thank you.
And my name is Karsten. I'm an entrepreneur. I'm involved in a couple of different companies. Nowadays, I'm mostly focusing on Mindpark, and I'm one of the reasons you're here today, whether you like it or not, but I hope you like it. And I've also been involved in starting Rescued Fruits and some other companies which are within sustainability. I'm an angel investor in Bintel, which does smart waste management, which reduces CO2 emissions, and I'm an angel investor in All Aboard, which aims to make trade travel hassle-free.
Thank you. Okay, so now we've set the frame. I work at Fast Track Malmö. We invest in 10 companies a year, and we have one KPI that says at least 50% of our companies should do something great for the world. And then we have Heidi investing in pre-seed and seed companies in climate tech. The best way of saving our world. Maybe let's talk about that later. Magnus investing as a VC. Then we have stock market. Magnus here investing in companies on the stock market, and Karsten, angel investor, who made a pledge to himself a couple of years ago. So tell us a little bit about that, Karsten.
I've been involved in starting companies before. So like 5 years ago, I said that starting companies is easy. So I would only want to do that with companies where the product itself is good. So that was kind of the background to the most recent companies I've been involved in. I want the product itself should be as good as possible, either for humans or for the environment or in some way or another. So I try to keep to that as much as possible.
Okay, thank you. And Heidi, can you talk a little bit about Pale Blue Dot and your hypothesis?
Sure. So we invest in companies that are positive for the climate. Now, climate tech companies are essentially in every sector. So we see everything from food tech, fintech, mobility, agriculture, fashion, supply chain. Essentially, every single sector will have to decarbonize. Every single sector will have to be ready for the climate crisis and will have to change. So it is very wide what we invest in. A lot of people assume that it's kind of renewable energies and really high capex things, but it's really not. There's really anything that you could imagine that needs to change for the future. So it's a pretty broad spectrum what we invest in terms of climate tech. But of course, everyone has to do something positive for the planet. And we, of course, measure impact in every company that we do. So we do make sure that, first of all, impact is core and they're doing it for the right reasons, but also to make sure that we're measuring that and that it's actually going to plan as well. And we'll be proud of them in the future.
Okay, how do you measure impact?
We measure impact in multiple different ways. So we invest in pretty early stage. Some of them are pre-seed companies with no revenues. So it's not always as easy as to say that, we're just going to measure how much carbon they're reducing, et cetera. And our companies are also very, very different. I mean, we have one company using satellite imagery to measure trees and help prevent forest fires. We have another company that uses seaweed as an ingredient to make a tuna substitute. And it really is super wide what they do. So what we do is we worked out impact KPIs with every company individually at the stage of investment. And then we try to figure out what should be measured for that company and what is actually core. Because we find that when people often try to say that let's just do the carbon emissions for every company, then you end up doing a lot of guessing, because you say, if it would be this, and if we assume this many people do this, then we reduce X, Y, Z. While in this instance, it's very easy for us to say, You're going to measure how many wildfires you actually were able to reduce. You're going to measure how many kilos of seaweed, for example, we are buying, which means that it sequesters carbon and it deacidifies oceans, etc. So we really try to make sure that what we measure is actually core to what they do. But it's a very qualitative process. I think it's very hard to quantify impact and try to say that everyone should have the same impact. So yeah, for us, it's a process and it's always evolving based on our investments and who we take on board.
Thank you for the answer. I know everybody here is like data driven and metric driven, hopefully, right? I also saw side note, Father's Day, it's a metric. Like if you get a lot of presents from your kids, then you've done a good job. Your birthday, bad metric. You just came to the world and you did nothing special. So try to measure things. I think that is good. Magnus, stock market. How do you choose your stocks to invest in?
We have worked out a system. I'm the manager of the fund. We invest in 70 different listed companies. And it's in 4 different areas: renewable energy, energy efficiency, sustainable transportation, and sustainable lifestyle. And lifestyle means what we consume, how we live, and what we eat. And it's a little different when it comes to the impact part, because it's listed companies. But how we measure, I would say that if we can drive this, if we can build opinion, then I would say that we're doing the right thing. I am one of those that are quite convinced that these areas that we invest in will be quite good investments in the coming 15, 20 years.
Great. I think that leads us into the next question. And what we need to talk about is what the definition of an impact company. What is it for you, Heidi?
So I'm very hard on this because I think we're fooling ourselves if we're pretending that every company isn't an impact company. Every company has some kind of impact on someone. And it's not always positive, though. There's positive impact companies, there's neutral impact companies, and there's negative impact companies. But every company is an impact company. But when we talk about impact and impact investing, we generally refer to the companies that measure their impact and are happy to transparently tell the world what they are doing and what type of impact they're having. But again, I would say that everyone in this room, if you look at your investments, they all have an impact on someone and something. And I think it's measurable for everyone. So in my opinion, every company is an impact company. It's just not a positive impact company, which of course we would love them to be.
But a question on that then. So if I want to pitch Pay Blue Dot, can any company pitch you, or how do you choose?
So we don't call ourselves an impact investor, which is important. We call ourselves a climate tech investor. So of course, impact is also, positive impact is even wider than that. Of course, you could do health tech and you could do other things that are great for the world. It's just not specifically core climate. So for us, we would never call ourselves an impact investor and put ourselves in that bracket. Of course, everyone else does because we have positive impact. But yeah, we call ourselves a climate tech investor. If you're doing anything positive for the climate, do come and pitch to us.
Great. Okay, how many people are investors in here? Okay, a lot of impact investors here. That's great. Congratulations. I think I would agree with you. Like everybody is an impact investor. You choose things, and some do a lot of impact, and some companies don't. We had a small discussion, Magnus, you and me, about Handelsbanken and Tesla like a while ago. Can you tell us a little bit about that story? I think that was pretty interesting.
How the discussion was, we were talking about Tesla, and it's tricky when you choose one company all of a sudden, because then you have to have a certain view, and we spoke about it, and I said that 1 year ago there was a comment from this bank saying that the working conditions wasn't very good, therefore they choose not to invest in Tesla. But I think about a month ago they said that the reason why they're not investing in Tesla is because it's valued quite highly.
Okay.
Well, it's always tricky when it comes to market values of a company.
Yeah, and they missed the whole the whole Tesla 1 year of traction here. Okay, so let's talk about what do we mean with I know we had a discussion. You had a discussion last year about ESG investments, right? Why do we set that as a separate thing?
Because we have a climate crisis hanging over us.
Okay,
is that a good enough reason?
Yeah, and I think if you look at investments currently, I would say a lot of people are moving into the ESG field just because, I mean, as mentioned before, as Sarah mentioned as well, like there's the consumer drive is towards ESG. So the pension funds are looking into ESG, and like everybody is looking into like, okay, we need to invest more sustainable or in one way or another. So I think there's this huge drive towards ESG, which like I think nobody can really afford not to do it right now. You're
also the EU taxonomy is driving this, of course, when it comes to all of the UCITS funds, at least.
Yeah, and I think there's multiple different things. I mean, when we raised this fund, we didn't do it because we think it's the right thing to do, although we do think it's the right thing to do to invest in climate, but we did it because we also know that this is going to be the best profitable area in the future. I mean, we saw loads of founders who've started companies before saying they want to dedicate their time to doing something of purpose. Consumer awareness, everyone is trying to do good and trying to figure out how they can be part of the solutions. Regulations, as you mentioned, regulations are changing, which means that it's going to be a lot more profitable to putting your money into something that regulations is going to be advancing. And then we see a lot of corporates taking these big pledges and saying, we're going to be carbon neutral by 2030 or 2050. They have no idea how to do this. No idea. So there's going to be so much money going into all of these things. And again, and countries, of course, saying themselves that we're going to be carbon neutral. So everyone's going to be putting their money into this sector. So it is really, I think it's just such a great way of proving to people that this is where purpose and profit goes hand in hand. This is not a compromise. This is not everyone waking up and saying, oh, maybe we should start thinking about doing good. I mean, you should anyway, but it really is because it makes sense to do it. And like you said, these are going to be the biggest investment areas. We have to decarbonize every sector and we have to do it soon. So, and everyone's realizing that. So I think it just makes sense. And ESG, of course, is a great way of measuring that and making sure that we're reducing the risks on the environment, on social, on governance, and really just making sure that we are focused on the investments that will drive the biggest impact.
Yeah, just a little bit more on that. What is more driving this change? I know, like, you have a fund, 100 million fund, euro.
100 million euro. USD, sorry.
USD,
100 million, 87 million euros.
87 million, okay. Like most VC funds have some governmental fund also investing in the funds. And then you have limited partners. So they stand for the, for the money in the fund, and then you try to invest. So what does LPs say out there, and what does some invest, for example, in Sweden say when investing in new VC funds? Do they like come with a lot of we want to see this or that?
In our case, I think we came at a right time. We started fundraising about 2 years ago, which is actually just before people started talking about climate tech as a word that was being used. It was really when there were thoughts around this, but it wasn't really so big as it's suddenly gotten in the VC space. But we do have a lot of people say that they want to put their money into something good and into something green and into better things. But at the same time, people did want to see proof that there are great companies that will actually have great returns, because this is not a charity. And I think this is an important thing. It is not philanthropy. People wanted to see that they're good returns. So a lot of our pitching and going out to LPs was also showing what type of great companies we are investing in, what kind of great companies are out there, and what kind of great exits we're already seeing in this space. For people to also realize that climate tech is not necessarily clean tech. It's not the same thing. It's not just renewable energies. It's much, much wider than that. So there was a certain amount of education, but I think once people kind of got comfortable with the fact that, this is probably where everyone's going to be putting money in the future, then they got really excited. And I mean, now we're seeing all the general VCs, all the generalistic VCs without an impact focus investing in climate tech. So it's kind of like it took them a while, but now they're realizing that that's where the opportunity is. days
But
off.
I find that quite interesting. I mean, for both of you, I mean, both of you were early in this field, and now you see a lot of competitors popping up.
Yeah.
Like, how is that good or bad, annoying?
I mean, sorry if I can start. I think it's great because we need everyone's money in this space, because it's not, we can't do enough with 87 million euros, and we know that, and we don't want to like have all the money and handle that either. So I think the more people we get here is the better, because it also means that there's so many companies out there, and there's more companies shifting here because there's more capital here, and it just accelerates the movement. But of course, it does feel a little bit strange at times when you have this great seed round and then you get the big players saying that we're gonna, double the valuation and invest in them, and that's happening a lot as well. So I'm not saying it's easy, but I still think it's the right thing.
I think the more the merrier, really. When it comes to regular funds that regular people invest in, I mean, the more marketing, the more these questions are left, the more space it gets, the better it is for everyone. And I mean, we do have a common goal.
Yeah, that's true.
Yeah, so we see that change is led by people want to invest privately, and from like Prometheus, and then we have family offices and rich individuals who want to invest in VC funds, and we have the government, and we have the laws and EU. So a lot of things at the same time is happening. So now the big question, and I see Pat over there is like thinking about, okay, how are you performing compared to other funds who doesn't have that focus? Or you can. It's you too.
Well, I'm quite pleased with the performance of my fund. The sharp quote of 1.5 or something like that, 1.6. So I'm quite pleased with what has happened this far.
And I don't invest a lot in funds. And how do you compare that to others, like in your?
Well, the sharp quote. Since the fund was started, the fund has gone up 150%, if I put it that way. And I'm also very pleased with that.
And that is great. That is great. Okay, thank you. So it works. Okay. Heidi, I don't know, how VCs work. They have a 10-year fund cycle, and you just started to invest, or you're 2 years in.
We're a year and a half in. So I think, I can't officially give you the results of how successful a fund is. I will wait for another 8.5 years to tell you that. But I can say that we're very pleased. Our LPs are very pleased, and our startups are raising enormous Series A rounds at the moment, which is from general VCs, which is great. So, there's a lot of interest in this space, and I think we're going to do really well.
You do measure, exactly. You do measure like the stages and when they go to the next stage in the valuation. So has that been good?
Yes, so that has been good. But again, we're only a year and a half in, but I think we have a few companies raising. I think maybe a third of our fund has raised. So out of 15 investments, has raised the second round already within a year. So either a seed or a Series A, depending on where they were. But it's so far so good.
Great. Okay, just please educate us. I know this a little bit, but you can answer. How many companies go from seed to Series A, like in general? If you take all, do you know that?
There have been, so I think in general, I think it's something like 25-30%. Yep. But I think it really depends on the fund. I think I've seen funds that have 75% of their portfolio go to the other next round. And it really depends, of course, if you have great investors, you have great backing, then you're more likely to kind of get further along. So it really is hard to say what kind of averages. I mean, we have thought that if 50% go to Series A, that's an amazing result. And so far so good, but it's really hard to say averages because I think it varies so much fund to fund.
Yeah, so just to encourage everybody who is looking for VC money, it's almost impossible to get funded, and then you can have funds that invest you who are also showing this is a great signal for the next fund. So it's it's tricky, it's hard. Next question. Okay. What do you see out there right now? Do you see any trends?
Well, as we mentioned, I see a lot of money going into this, of course, but it's not enough. We are in the beginning of a a sustainable paradigm shift. So I mean, this, as mentioned here before, this should be just the beginning of something that will probably go on for a generation. So trends, I think we're going to see new products, new solutions, maybe a mix, a merger of what you're doing compared to what I'm doing. I think there's a lot of regular people, regular savers out there that want to be part in this, being more part of this. So I think more flexible products will be coming.
Okay, and you, Heidi, do you have any sectors that are super hot out there right now?
So many. It really is the whole climate tech space. I mean, climate tech in general has grown faster than AI ever did. So it just shows you how crazy this whole industry is and what's happening in it.
Can I stop you?
No.
Climate tech, what is it?
Climate tech, according to us, climate tech is, so the people have a lot of definitions on climate tech. So it's not really clean tech, as I mentioned, it's more like renewable energies, a lot of high capex stuff. Climate tech for us is much wider than that. It is climate positive companies in any sector. And it really can be in any sector. And I mean, the important thing is that these are marketplaces, these are SaaS companies. You don't even need to call them climate companies because they're like a fintech company or they're a food company or whatever, but they do something positive for the climate. So it's not a sector. It's essentially horizontal. It's just kind of a naming that we use to kind of say that it's a climate positive company. But in terms of trends, I think there's so much out there, to be honest, in every single sector right now. I think things I'm super excited about is seaweed for food, seaweed for materials, seaweed for protein, for dye, for so many different things. I think seaweed is like a magic ingredient. Seaweed for just sequestering carbon, for sinking carbon. That's one of the things I'm super excited about. So much is happening in fintech. So much is happening with retail investments, with pension funds, just people trying to realize that how can I myself put my money into more sustainable stuff and just giving consumers the tools to do so. That's another space that's super exciting right now. A lot is happening in agriculture, of course, trying to figure out how we have more sustainable practices. A lot is happening in food. And then, of course, there's the whole carbon markets, which is a whole new thing that is still kind of partly being figured out in terms of how that's going to pan out as well, both in terms of carbon accounting, but carbon offsetting, and et cetera. So, yeah, a lot of trends happening right now. And
everybody's like thinking like seaweed. Okay, why? Can we start here in Helsingborg? I see a lot of water out here. So what kind of startup can we start in Helsingborg? So seaweed it probably grows really quickly.
It grows 5 times faster than land-based plants. It sequesters, well, actually, it might be even faster than that. It sequesters 5 times more carbon than land-based plants do. It deacidifies the ocean, so it's really good for just ocean health, for biodiversity. And the problem is we haven't had a demand for it. We didn't know what to do with it. We just let it be there. And now we know we can sequester carbon and we can sink it to the bottom, and it can actually store carbon. We know we can actually eat it. It's a much better protein for us. Omega-3 comes from seaweed. It comes from what fish eat and not actually from the fish itself. Think about that. So there's a lot of things we can do.
I love it. So anybody here from...
Tiny education there, but we have more on our website.
Okay, great. We will check that out. We will give out business cards for Prometheus as well. We will do everything. And anybody from Trelleborg, you will know, like, we have seaweed, and now you know what to do with it. So when you drive in Trelleborg, it's like, now I feel that I'm in Trelleborg, because you just feel the smell, right? So there's a big market opportunity in Trelleborg.
Love it.
Okay. What do we do now? we want to save some time for questions, because somebody's hijacked our topic in the last last panel. I was freaking out. I was burning all my questions. And now you have do we have some questions from the audience?
Do we have any questions from the audience? Can we raise your hand if we have any questions?
This is what I thought.
If not, then I can start with a question.
Yeah.
So how is it possible to become, because a lot of companies, when pitching themselves, they want to say that they're the new Uber, they're the new Facebook. Is it possible to become the new Uber or Facebook if you're sustainable? And can these sustainable companies win against non-sustainable companies when on the stock market, for instance? What do you think?
Of course, definitely. Sustainable is the future. So we're going to see so many new companies that are just based on a sustainable thought. And they're going to go head on with the traditional companies in the coming, let's say, 10 years. And the demand for this will just increase. So my answer is definitely.
So if we're thinking, and I'm pro sustainability, I'm trying to I'm trying to ask a little hard question here. If you have two products that are fairly similar, but one maybe is more cost efficient, might look better on the stock market, but you have a sustainable competitor, how can we ensure that we focus on sustainability? Do you think it's possible in that case for sustainability to win? Or is that not the way forward, maybe?
Yeah, so I think few things there. One, like Facebook and Uber aren't necessarily great companies. They haven't necessarily been great for the world. So aiming to be that is probably not the best thing. But I think we can build as successful company or more successful companies. And I think this is also kind of, again, goes with the fact that this is not a compromise. I mean, we're not really investing in companies where they say this is a premium product and therefore you have to pay for more for that. They actually have to be able to deliver at the same price. They have to be competitive with the other companies that are out there. It's just that the impact and the sustainability is a plus on there. But due to regulations, due to consumers' mind shift, due to what there's demand for, this is actually possible. And I think this is the kind of great shift. Like there was a time that it was like, oh, it was like a premium thing and you had to do more and you had to pay more. But we're not really there anymore. We're actually moving to a place where, yes, we will see really great unicorns in this space and they will be sustainable. And I think in the future, it's going to be the norm. We're now having the conversation, is it possible? And soon we're going to say, of course it is. Like, that's what people want. People want more vegan food. People want healthier things. People want platforms that are good for them or, you know, make them feel better. That we realize that's kind of where the world is evolving. And we kind of want more out of tech. It's been a bit disappointing if we think about what we've actually gotten.
I agree. Yeah. And if we have a question over there. Let's see, you'll be handed a microphone. And if anyone has any questions, then just raise your hand or shout out.
Yeah. Hi, Olof Tedin from Invest in Skåne. I'm just curious, probably all of you have followed COP26 and all the other media coverage of the different conferences regarding sustainability. And you as impact or sustainability conscious investors, do you think that lawmakers or government organizations or countries are doing enough to deregulate or change the regulatory space fast enough in order to accommodate these new inventions that is coming out, basically?
Yeah, I would say definitely no.
Yeah, I'm with you.
But I think it's always a challenge for lawmakers. The lawmakers are used to catch up. That's how it works. And now suddenly they actually need to lead a bit at least, or at least be on the same pace as society. And I think they will struggle a lot with that. So I think they will. I would be very impressed if it would move faster than now. I don't think that's possible, actually. I don't know what you.
I would say, as you say, the lawmakers, it will take a while. I think the market will drive this, will spearhead this, and then the lawmakers will come after.
I mean, it's happening, but way too slowly for where we need to be, which is also why we assume it's going to be so accelerated. And it's just that this is just the beginning.
As a follow-up, what is the biggest challenge in that space?
In getting the lawmakers to work faster?
The biggest hurdle for them to understand what needs to be done in order to accelerate change.
I think when we actually see the change where we live, that is when we usually like wake up and think, oh shit, this is happening here, you know, like half of our country is underwater or it's like, yeah, it's like in a relationship, you like understand it before when it's over, and like then you try to fix it, right? And I think it's the same with our climate. We will wake up when we drive a lot of people out of their homes and to save themselves.
Yeah, I mean, there's a lot of structural things that need to change. I mean, the money and the power that's been with oil companies, and there's a lot of things that structurally, a lot of countries are very dependent on their relationships to these companies, and a lot of money is in a lot of spaces. A lot of people don't want to upset people, so a lot of the fact that the regulations are being so slow in certain countries are deciding not to do anything is because of the fear of what will happen, and trying to set up the economy so that they will work without having access to the things that you had before. So and it's just a gradual change, but I think it's just we have to put more pressure on the industry, and everyone from consumers to investors to startups to corporates. It's on all of us to keep putting pressure on there and make sure that they change.
Yeah, I think that's definitely one of the lessons from COP26 and all other things, that it's not one part that can solve this. Everybody needs to solve it. But I think, I mean, but of course, this is a wrong room to say anything else. But it's market driven in the sense that you definitely see the companies taking the lead and moving things forward. I would say, and it's consumer driven, and then it will also work in different ways in 5 years because lawmakers will be there. But we're very pro-business in this room, I would guess. So might have been a different discussion if it were politicians here or something like that.
I have a trend. I think I don't know if you read about like a couple of weeks ago where Sequoia they went from their fund 10-year fund cycle, which is not always like Klaus Mikko said. Like, I love that you're investing in deep tech, but sometimes it takes just a little bit longer time. And they opened up that, and that is also something I really appreciate, and that some of the VCs are going to make, like, they're starting, and I know this is going to spread, and I think we're going to see a lot more innovation because of that. So they can get in, so they have time to get into the stock market, so everybody can invest, even my
Excellent.
mom. Yeah.
And if we don't have any more questions from the audience, I just have one last question.
Go.
We have a bunch of investors in here, and I don't know if everyone in here invests in positive impact startups, but if some investors here who are not familiar with, for instance, what KPIs, what to look for to say that this is a positive impact startup, what KPIs can they look for? Or where can they find the information after this event?
I mean, you have on your website started to publish research in your fields, as in seaweed, for example. I think that's super good. I think it's definitely quite hard to know which KPIs. I mean, I can just go from my own examples that it's very easy to think, this is super good for the environment, and then you realize, wait, there's this effect 3 layers down, which actually turns out not to be as good, or you solved something you thought. Like in my surrounding, I see a lot of people starting companies. So I see a lot of people, especially successful entrepreneurs. I see that they sell their company, and then they're like, what do I do now? I bought my Tesla, and I'm not going to travel anymore, so I can't go abroad. And then there's like, I'll start a new company, and then they want to start something with sustainability. That's super clear from my surroundings. But quite often they're newcomers to sustainability. So they try to solve things they think are issues, but it's often more complicated. You need to dig down a couple of layers. So I think it's much more complicated than you would think, which is the hard part. And I'm guessing you must see that a lot, like in your pitches.
Yeah, I mean, so we're very lucky to be able to have a researcher in-house that helps us figure out where the biggest climate impact is, and who does this research around the stuff that we open source as well. So we really go deep into it, figuring out, is this the best for climate? And it does mean that we often go down the rabbit hole, and something is good for climate is maybe better than that's out there, but then we have to think, is it the best for climate? Could you do it even in a better way? So of course you can go down that rabbit hole, and as a climate tech investor we do, but I think a good start is any startup you see, look at whether they have any kind of information about impact and sustainability, and then start from that problem. They're saying they're solving this problem, and then really go into that. Is this the best way? Just by Googling it and reading about it. I think that's just the best way of doing it, because you can't know everything everywhere and what the best solutions are. You just have to start from the little point you get from the startups. But expect them to have some information themselves. Like they should have.
But I would actually say that, I mean, doing the research is actually fairly important from the investment point of view, because I'm quite close to the e-commerce field, for example, and so I've seen like people pitching sustainable startups with e-commerce, and then it's often like, we want to limit the number of returns on e-commerce. That must be good for the environment. And then it turns out, if you do the research, it's really small effect of returns in e-commerce, because the trucks go anyway. They just bring some stuff back instead of going empty. So like, and you don't know that. And and I've also seen it happen that you as entrepreneurs, you've so invested in your ideas that you actually don't really, when you find out 2 years later, wait, we actually thought a little bit wrong, you still want to succeed with your startup. So it's actually quite hard to diverge from it. So I think doing research is actually important, but it's hard.
And as an investor, do you feel like once you're in, or can you, when you see that it isn't giving the impact, the positive impact that you wanted, should you leave?
It's a great question. I mean, we tend to invest in companies where it's so core. So, for example, a company that uses seaweed as an ingredient to make food. I mean, of course, they could pivot and said, we're not going to use seaweed. We're now going to, do pork or whatever. But it would be pretty radical. So essentially, you look for that alignment with values, so that that founder is going to be in that space and is doing it for the right reasons. And then they hopefully will pivot to make sure that impact actually exists there, if that space doesn't work out. So I think so much of it, like for us as an early stage, it is about founder alignment and like, why are they doing what they're doing? Because then it's very hard to kind of give up on that. But yes, it could happen that they would pivot and say, oh, we're going to do oil instead. And in that case, we would probably get out.
With those words, thank you. Let's wrap up this panel. Give them a round of applause. Thank you so much. And now it's soon time for our next breakout session and fika. But before we proceed to process the learnings from this amazing panel, I want to introduce two great local startups to the stage to introduce themselves. First of all, we have Allihopa, which is a green business travel platform. And we also have Rekoama, which is revolutionizing the building industry with their sustainable building materials. So please give a warm welcome to Nancy from Allihopa and Max from Rekoama. There. You can sit down. So first of all, Max, can you elevator pitch? What is your startup doing?
All right. This is not really a pitch, but I'll just tell you a little bit about what we do. So we're a local startup. We call ourselves the Uber of sustainability. Not really. But what we did do was identify, let's call it a room for improvement in the construction industry, which contributes to a lot of the waste and emissions in Sweden and worldwide. So we wanted to offer an alternative product, truly circular, recyclable, recycled, and in doing so, still maintaining enough high quality and a low enough price tag to make the product attractive, regardless of the sustainability aspect. And the result is a construction board. I'm sure everyone can see it in great detail from down there. What we do is we take waste that would otherwise be incinerated and give it new life as a construction product. And it has high enough performance to compete and replace all existing traditional materials, and can be replaced without adaptation from the customer. So it qualifies for all the eco labels out there, which makes it attractive for customers from a variety of segments, from construction companies to furniture manufacturers, house producers, and architects alike.
Thank you so much, Max. And Nancy, what is your company doing?
Hello. So we are not a seaweed company. So a couple of years ago, when the IPCC report first came out, I decided that I was going to spend the next 12 years of my life to lower emissions in society, because it said we have 12 years to do really something. Together with my co-founder, who left his work as a director for Eurostar and French National Rail, we started Allihopa, which is a green business travel platform. Today, as a corporate, it's very difficult to travel green. It's not like for us as B2C customers, we can easily use apps to book public transport, to book a scooter or to book trains, and we can book food, we can book our seat. You can't do that when you're in a big corporate, and the travel managers there, they're looking after tens of thousands of people often. They need really reliable CO2 reporting tools, expense management tools, and so on. So what Allihop does is we offer travel in cities with urban mobility, with public transport, with trains nationally, and also in the rest of Europe. And what's unique about us is that we change behavior. We're the opposite of an offsetting tool. So the companies are telling us they really need help to change behavior. And we have a gamification tool that we use to do that with. We're a SaaS company, and the employees, they book via their own intranet, so it's a very safe tool to use. We do all the reporting as well that they need. And we have big customers onboarding, so one of the world's largest IT companies is onboarding right now. In terms of investment, we're launching in a couple of new European markets next year. So we're looking for 1 million. We have a lead investor. 1 million euro, and we're closing in December. We're looking for one more venture capital firm to join us on the ride. And for us as founders, we're looking for someone that we can work with for 5-10 years and have a really, really good working relationship with. Thank you.
And since you're currently looking to close a round, let's just ask, what are your growth plans now with this money?
Yes, so we have quite an aggressive business plan. We want to grow by 200 to 300% year on year, and that's necessary to take the entire European market. We plan to take 10% of the green travel, business travel market in 5 years. And we're launching all across Europe within the next 5 years, starting with Germany and Denmark and Norway next year.
And Max, how has the interest been for your company from investors?
Well, I can start by saying that we're also opening a round soon, by the way, so right there. But the interest has been great. If it comes from the sustainability aspect, it's very hard to answer. Like some said, everyone is happy to put out big sustainability statements. But in the end, what we've noticed from customers and investors alike, it's still the money that rules. We've heard from customers that there are two things that can drive change in the construction industry. It's force of law or profit. And what we offer is probably an advantage in both of these things for our customers. And I believe people can see that. And that's also what makes us attractive for investors.
Thank you so much. We need to wrap this up, but I have one last question for the both of you. So what is it really how do you define yourselves as sustainable? What is the unique selling point that makes you sustainable? We can start with Nancy.
So our gamification tool is really unique on the market. A lot of companies do CO2 reporting, but our tool really changes behavior, which a lot of companies are telling us they need help with. And it's the one place for booking long distance, short distance, all travel you need in cities and nationally. Thank you.
Thank you so much. And Max?
Right, so back to the vague sustainability reports, statements. What we do is actually really measurable, like quantifiable. We take actual waste, which would be incinerated. There's an easy calculation on how much waste is removed from society, how much CO2 would be emitted if it were to be burned. And also the products that our board replaces, they are associated with large amounts of water, large amounts of energy to produce it. So it's not as direct, but also a calculation that can be made quantifiably.
Thank you so much, Max. If you want to talk to them, you can find them during the breakout session. They're looking for money. So that's it. Give them a round of applause.
Thank you.